Hello and welcome to Insurance in Canada. I'm your host, Rick Pineda. Thank you so much for joining me. On today's episode, we're looking at three stories. The first story involves whether all the new technology that comes with today's modern vehicles is causing vehicles to be considered a total loss, where in the past they wouldn't. Our second story resulting from a court case here in Ontario where a mother was still found liable for an accident involving a vehicle she owned. Even though her son was told that he was not supposed to drive the vehicle, the mother was still found to be liable for the damages her son caused. And our last article comes from Alberta, where the Alberta Motor Association has announced that many of their motorcycle insurance policies will not be renewed in light of the changes coming up in Alberta accident benefits. So without further ado, here is insurance in the news. So our first story looks at a topic we've touched on previously about today's vehicles, all the technology that comes with today's vehicles, some for uh, driver comfort, some for driver convenience, some for passenger comfort, some for safety systems, and how all this new technology causes the cost to repair a vehicle to increase significantly. Now, when a vehicle is involved in an automobile accident, if the cost to repair the vehicle involved in the accident, reaches a certain percentage of the current market value or actual cash value of that vehicle, an insurance company will declare the vehicle a total loss. They do that because there's always a possibility that once repairs commence, that there's other damage that's discovered during the repair process, which could cause the estimate to repair the vehicle to go beyond the actual cash value or market value of the vehicle. But if the insurance company has informed your client, the insured, that the vehicle is going to be repaired, and they commence repairs, then the insurance company has to finish the repairs regardless of how much it's cost. They can't stop in the middle and say, no, we're just going to pay you the value of the vehicle. So that's why insurance companies, like I said, once it reaches, it varies from insurance companies to insurance companies, but normally it's between, if the repairs reach 70 to 90% of the value of the vehicle, then the insurance company just declares it a total loss. But with the new systems technology that vehicles come with today, it's turning out that the repair threshold, repair cost meeting that threshold is occurring even with what would seem to be minor damages in the past just because of the cost to repair the vehicles, and that's what this article looks at. So let's take a look. Do advanced driving systems really mean more cars get totaled? While many parts are more expensive, the threshold for totaling out vehicles is more nuanced. Stories abound about how costly components for advanced driving systems, i.e., blind spot sensors, lane keeping technology, are leading to more vehicles being totaled. Canadian property and casualty professionals commenting on high claims costs routinely cite the $10,000 bumper or the $3,000 side mirror as hallmarks of why personal auto insured losses are out of control. But an appraiser tells Canadian underwriter the reality is more nuanced. The issue I find is that at the shop level, we can't always clear or recalibrate the codes for the sensors, so certain cars have to be sent out to a dealer, says Mark Fernandez, National Director of Operations at Accurate Auto Appraisal, and that's prolonging the repair time because it's going to be another day or 2 days for this calibration. For example, when a bumper is damaged, sometimes there's problems with a sensor on the side of the bumper that wasn't impacted during the accident. The sensor itself checks out as fine, but if that sensor is linked to one that's damaged on the opposite side of the vehicle, is often can't be recalibrated and will need to be replaced. Fernandez gives the example of a luxury car that was hit on its left corner. Everything cleared on the scans in our shop, but the customer took the car out, then brought it back and said the dash lit up like a Christmas tree. The car had to go to a dealership because the diagnostic machines at Fernandez's shop didn't have manufacturer specific features needed to troubleshoot the problem. And that's another issue I've been hearing quite often when it comes to the car repair industry, how auto manufacturers these days are making the ability for the neighborhood garage to access the tools that they need in order to conduct repairs uh, being blocked by auto manufacturers. As far as I understand, Tesla is one of the uh, bigger problem childs in the auto repair industry. Uh, them blocking the ability for many independent garages to access the tools and the diagnostic equipment that's needed in order to properly repair a Tesla, requiring the insurer or requiring the owner of the vehicle to have to take the vehicle to a Tesla dealership in order to exact any repairs on the vehicle. Uh, but getting back to the article, he notes many luxury vehicle makers provide significantly more detailed information to their own repair centers than they do to independent providers. And just want to go back, I'm not picking on Tesla, it's just stories I've heard about Teslas in particular, but I'm quite sure there's other auto manufacturers out there that are employing the same tactics. Feel free to comment about your experience in the comments section if you've experienced that with your own vehicle's manufacturer. It turned out we had to change an undamaged sensor because that's what the code state for repair to that vehicle, he says. It was nowhere near the impact area, but it could still be affected. The vibration from the accident could send it out. Until all body shops have a fully trained calibration technician, we're at the mercy of the dealership. Most shops will have people who know a lot but can't know every vehicle. Some require a different computer that only the dealer has. Beyond diagnostics, some routine repairs like resurfacing damaged areas or painting a bumper to match the bodywork can cause issues with components like parking sensors. These are sensors behind the bumper which can lead to a whole issue because some OEM or original equipment manufacturer specifications say no repair material over it, so you can only paint or clear coat. That means if the bumper is scratched or gouged, the repair shop is unable to use body fillers and instead must replace the whole bumper. It can be $7,000 for just the plastic cover. When you add in all the clips and sensors and radars, just the bumper can become expensive, he says. Also, the price tag varies based on the make and model. Fernandez says bumper sensors are relatively inexpensive, but there is a range from $100 for some lower cost car models to $2,500 for high-end luxury vehicles. All that translates into sliding scale when it comes to deciding whether a vehicle should be totaled. A more entry-level vehicle which these days can range from $30,000 and up, can have a repair involving parts like bumper sensors performed for around $4,000 and remain financially viable for an insurer and client. And although it's true bumpers complete with sensors can sometimes cost upwards of $10,000 to replace, these examples apply to luxury vehicles carrying six-figure price tags so that repair is affordable and not a total loss when the vehicle high value of the car is taken into consideration. It's all relative, but he adds vehicle age is also a factor. Once a car passes the 10-year mark, repairs requiring costlier components can exceed the book value of the vehicle. So it's an issue that's going to hit the wallets of the general public in terms of increased claims cost for the insurance company, and those increased claims costs get passed on to the policy holder. So if the insurance company is having to constantly total out vehicles for minor accidents just because the cost to repair or replace the systems that are damaged just reaches astronomical levels, then it's going to have to be eventually reflected in the cost to insure that vehicle. The other aspect of that is it's for many people it's very inconvenient to have their vehicle declared a total loss. For them to, yes, they'll receive the market value of the vehicle. Maybe they'll receive the replacement value of the vehicle depending on what kind of coverage is on their policy. However, for most people, having to go out and buy a replacement vehicle takes time. So they might be without a vehicle for a few days to a few weeks before they're able to purchase that other vehicle, where before it would have been much more convenient for them just to have their current vehicle repaired and then returned to them being repaired. But it's always the option of the insurance company, the decision of the insurance company, whether they're going to repair or replace repair or pay out the market value or actual cash value of the vehicle. So the client, the member of the general public, the insured might want to have their vehicle repaired, but if it doesn't make financial sense to the insurance company, I can tell you Ontario and most other provinces and territories in Canada give the option to the insurance company to make that decision whether the vehicle gets repaired or replaced. So it'll be interesting to see how auto manufacturers respond to these complaints coming from the auto repair industry, both in the cost of repair parts, and I'm sure they'll hear from the insurance industry as well. So the cost of repair parts, as well as the accessibility for the equipment that the independent garages need to make the repairs to the vehicle. Our second story comes from Ontario regarding a accident and a situation where a mother was still found liable for the damages that her son caused in an automobile accident, even though she informed him that he was not supposed to be driving. Now he's not supposed to be driving the vehicles, and the reason why the court still found her liable in that particular situation. Because if you're normally in most provinces in Canada as well as the territories, if somebody takes your vehicle without permission and gets into a car accident, normally you are not held liable for the damages because somebody took your vehicle without permission. But there are caveats to that. There are exceptions to not being found liable, and we'll take a look at one of those right here. And obviously, insurance implications, because if somebody is found liable in it for the damages, obviously it goes back to the insurance company to provide a defense as well as possibly provide coverage depending on the policy wordings and the situation of the accident. So a mom forbids her son from driving her car while she was found vicariously liable for his crash. Even if your client forbids their children from driving the car, they can still be found vicariously liable for an accident if they surrender possession of the car to their children. The Ontario Superior Court has confirmed vicariously liable means even though you didn't cause the injury directly, either your child or your employee, if your employer, can still be held liable for the damages that your child or your employee cause, being the parent or the employer. So that's what vicarious liability is defined as. Surrendering possession of the car to a child, even while prohibited them to drive, is considered to be implied consent to drive their car. The court confirmed in Eden versus Levasseur. Owners' vicarious liability under Section 192 of the Ontario Highway Traffic Act is based on possession, not operation of the vehicle. Ontario Superior Court Justice John McCarthy writes in a decision on March 17, 2026, an owner may be vicariously liable if she consents to another individual possessing the vehicle, regardless of whether she consents to that person operating the vehicle. Matthew Levasseur is the son of Patricia Mason. Matthew was the unlicensed driver of a 2001 Volkswagen Jetta owned by Patricia during the time of a single vehicle accident on Thunder Bay Road at or near Fort Erie in December 2017. Christopher Eden was a passenger in the vehicle at the time of the accident. He sued Matthew, Patricia's auto insurer Aviva Canada, and a sports bar seeking damages for personal injuries. The parties agreed to a settlement. I'm guessing we're suing the sports bar because probably Matthew had a few drinks at the sports bar before he drove the vehicle. In Eden, the question was whose auto insurer had to pay the settlement, Patricia's or Eden's. Aviva Canada insured the mother, Patricia, who owned the car. Heartland Farm Mutual insured the injured passenger, Eden. Heartland said Aviva should have to pay the settlement since Patricia had given implied consent for her son Matthew to drive the car. She was therefore vicariously liable for the crash. She did this by giving possession of the car to Matthew, even if she forbade him from driving it. Get into the details. Patricia bought the vehicle to give Matthew something to work on with Darren, the court found. Darren being Matthew's friend, Darren Graham. Uh, Matthew's father had recently drowned, and Matthew was suffering from post-traumatic stress disorder. The decision notes Patricia consented to the vehicle being stored at Graham's residence, where it could be restored and put into a roadworthy condition. She never saw the vehicle or possessed the key. In fact, at the time of the accident, she forgot that she even bought the car. Okay. Sure. Patricia did not know the vehicle was roadworthy at the time of the accident. The decision notes she never checked on the status of the vehicle or the repairs and never attended Graham's residence. She did not know his address. Patricia intended to transfer the vehicle to Matthew once his license was reinstated and he was able to obtain auto insurance. McCarthy writes, because you can't obtain insurance on your own if and be a driver on your own policy. You can't have coverage on your own policy if your license is not valid. Either license is suspended or license expired or improper class of license. She did not know he had been driving the vehicle 6 months prior to the accident. Patricia placed insurance on the vehicle with Aviva when she bought the car because she thought she had to. She did not tell her auto insurer Matthew would be driving the vehicle because she did not think he would be doing so. He wouldn't even be able to be added as a driver on her policy anyways because he doesn't have a valid license. That's just my comment. Allowing Matthew to possess, store, and work on the car to make it roadworthy, the court found made it clear she gave Matthew implied consent to operate the car. It was reasonably foreseeable, even inevitable, that Matthew would operate the vehicle on the roadway at the first opportunity, McCarthy writes. After all, what is the purpose of seeking to make a vehicle roadworthy other than to operate it on a roadway? And how would one know a vehicle is roadworthy without operating it on the road? I find it incredible that Patricia would have believed that any prohibition on Matthew operating the vehicle would have been observed by him. Matthew's attempts to hide the vehicle's location from Patricia, coupled with her failure to make any inquiry about the vehicle's whereabouts or the status of its roadworthiness at any time, point to a total domination of possession by Matthew without the slightest element of control or concern by the legal owner. De facto control was with Matthew. The fact that Matthew operated the vehicle on the road for perhaps 6 months prior to the accident simply reinforces the objective and realistic belief that any prohibition against him operating the vehicle was singularly ineffective and wholly unenforced. I can fairly infer that it was never seriously intended to be observed. So yeah, so we have a situation. Normally, it would be the mother would not have been held liable because he took the vehicle without permission, but then again, she didn't even have control of the car keys or the vehicle. She totally lost control of the vehicle, and that's a pretty good indication that you're not going to be immune from liability in a situation where vehicles being was taken without permission. If you've pretty much given over control of the vehicle to somebody who you informed before that they were not supposed to take out or not supposed to be driving the vehicle. So lesson learned to all of us here. If you're gonna buy a vehicle for somebody, honestly, don't put that vehicle in your name. Because you put that vehicle in your name, you are taking all the financial responsibility. You potentially can be taking all the financial responsibility for any injuries, property damage that that vehicle causes, obviously subject to the laws of your particular province or territory. So take that with a grain of salt. But my advice, somebody, you want to buy a vehicle for your kid, put that vehicle in your kid's name and make them responsible for that vehicle, including financially responsible if it turns out that way for having that vehicle being the owner and the driver of that vehicle. So lesson learned. Unfortunately, it's one of the hard ways to learn that particular lesson. Now, going back to the insurance aspect, this being in Ontario, there's a few, I can think of a few exclusions under the auto policy that's being violated, specifically the exclusion in the statutory conditions in the Ontario automobile policy, one, the owner's policy, allowing somebody to operate the vehicle while unauthorized by law. So she knew that the license of her son was suspended, or I think it was suspended, uh, and allowing him access to the vehicle. Yeah, it could trigger an exclusion, but having this be under the liability section, there's still a possibility of some coverage under the liability section, but I won't get into uh, too deep into the weeds when we're talking about the liability coverage under your automobile policy here in Ontario. But just be aware that there is that exclusion that it exists in the statutory conditions, allowing somebody to operate the vehicle when you, as the vehicle owner, known or should have known that the person was not authorized by law to operate the vehicle. So, lesson learned for this individual, and hopefully you all learned something from her mistake. Our last article, upcoming changes to accident benefits in Alberta, taking place on January 1st, 2027. So that's coming up pretty soon, in several months. However, some of those changes has caused the Alberta Motor Association to not renew the motorcycle policies of some of its clients, and we'll take a look at the reason why. AMA stopping some motorcycle insurance ahead of new provincial rules. Some motorcyclists are looking for a new insurance provider after the Alberta Motor Association sent them notices their policies won't be renewed even if they have a clean driving record. The decision comes in advance of changes to Alberta's rules around people who are injured in a crash. Starting in January, if you are injured in a collision, instead of suing the driver who caused it, your insurance would compensate you based on rates set by the province. The AMA says the shift to the Care First system significantly expands benefit and coverage for injured Albertans, and we believe that is a great thing. The company says it reviews its products and risk tolerance annually, and said this year is changing its motorcycle coverage that affects a very small number of motorists who represent a significantly higher injury risk. AMA says less than 2% of its policies are part of the motorcycle policy changes. Those impacted are typically less experienced riders, individuals with traffic convictions or prior claims, and or those operating high-performance motorcycles. The AMA added, motorcyclists say it's everyone's job to be safe on the road and be aware of the vehicles around them, no matter the vehicle. You just have to be smart. I always ride like everybody on the road is out to kill me, says Mike Cooper, who has been riding motorcycles for more than 45 years. Most of the accidents that I know of back when I worked in the bike business and such were actually caused by car drivers. Which is fine and dandy, but when you're talking about no-fault insurance for accident benefits, it's still going to be the motorcyclist insurance company who is going to be paying out the accident benefits for the motorcyclist, because it's normally you go to your own policy first to obtain the accident benefits, and it's fine that the car driver might have been liable for most of these accidents, but still the insurance company of the motorcyclist is going to be paying out for the injuries that the motorcyclists suffer. And of course, we are talking about motorcycles. Even a minor accident with a motorcycles can cause significant injury to the riders and any passengers on the motorcycle. So we can see why the AMA is looking to unload some of the motorcycles policies. Not all. It just indicates only for certain riders. But it would stand to reason that if these upcoming changes weren't happening to the Alberta auto policy, that these riders would still be able to be insured with the AMA. So let's call a spade and read between the lines of what the AMA is trying to get at. In a statement from the province, the Office of the Treasury Board and Finance says the AMA has assured us their decision to adjust how they approach the motorcycle class of insurance is not associated with a transition to Care First. Okay, sure, that's the statement that the Treasury Board wants to put out, but I'm not buying that myself. Let me know what you think, if you think this is true, or if you believe that this is true or not, if this is just a coincidence, or whether the changes to upcoming accident benefits that Alberta is feeling this particular change. Alberta's transition to a care-first auto insurance system is focused on improving care, supporting drivers, and helping stabilize rates across the industry over time. The change in policy has some motorcyclists concerned about the possibility other companies will follow in AMA's footsteps. It's going to be that you can't insure a motorcycle in Alberta any. Is it just going to be that you can't insure a motorcycle in Alberta anymore? Said Brandon Pritchard with After Dark Motorcycle. These insurance companies are going to are almost just going out on a limb and saying we are assuming that something is going to happen, and we are assuming we're going to have to pay for your damages, but that's also kind of what insurance is for, which is true. But insurance company, when it comes to risk tolerance, only goes so far. Once we approach that line, the insurance company is not going to want to go past it. So either they'll make changes to their rules that the regulator for the province or territory would approve, or they'll close up shop, as some insurance companies in Alberta have already done. I know Aviva Direct and Sonnet Insurance have either left or are about to leave the province of Alberta, just because, like I said, they've reached that line and they're not going any further. They couldn't get any changes done to their rules or rates to make it tolerable, so they choose to leave instead. So Pritchard said one of his customers who wasn't having their insurance dropped by AMA instead saw it going to raise by more than $1,000, prompting him to switch companies. I hate to say it, but people will start resorting to riding with no insurance, he added. I can't stress how bad an idea that is. Motorcycle riding, I don't care how many years experience you have or don't have, is always going to be a risky affair just because of the activity itself. Riding with no insurance, like I said, even a minor accident with a motorcycle is going to more than likely going to result in some sort of injury, and even the greater the possibility of being a more severe injury than what it would have been if the rider was inside a vehicle. So, and if you're involved in the accident and have no insurance, where are you going to receive compensation to help you recover from your injuries or loss of income? So that's not a risk. That's not a good idea, not a risk one should be taking. AMA is the only insurance company CTV News Edmonton could confirm was not renewing some insurance policies ahead of the changes in Alberta's insurance model. But keep in mind, like I said, those changes are coming up on January 1st, 2027. So just because CTV couldn't find other insurance companies who are adopting the same ideas what the AMA is adopting doesn't necessarily mean insurance companies either this year or maybe even next year won't be doing the same thing when it comes to motorcycle insurance. It's always a tricky business trying to insure motorcycles. Not many insurance companies want to insure motorcycles to begin with in those provinces that have private insurance schemes. So making it even less palatable for the insurance industry to insure motorcycles doesn't help the riding public. But we'll have to wait and see how it results in the province of Alberta after the changes are enacted on January 1st. And that is it for me for today. Thank you so much for joining me. If you like what I do here, please like and subscribe for more. Please share this video with others who you think might be interested in the information presented today. Make sure to follow Insurance in Canada on Twitter/X. And until next time, bye-bye.